If you're a home buyer facing the possibility of making an offer on a home in a somewhat competitive environment, then understanding how to use appraisal gap strategy can be the one thing that either allows you to purchase the home of your dreams or just miss out. Hey guys, it's Swanson here with Guild Mortgage, and in this video, I'm going to walk you through what appraisal gap coverage is and how you can use it strategically to be able to buy the home that you're wanting to buy. This matters because just about every spring in my market, which is Portland, Oregon, we see competition or the number of buyers flood into the market and compete over homes. And that ultimately typically pushes up the sale price relative to what the home is listed. As a result, buyers have to put their best foot forward to be able to get their offer accepted by a seller. To convey this topic, let's just take an example. Here we have some buyers, Mark and Sarah. And Mark and Sarah have been looking for a home for their family, and they finally found one. It's a home in the neighborhood and school district they're looking for. The price is within their budget, and it's the perfect spot for them and their family to live the next few years. So they decide that they're going to make an offer. But as they sit down to make an offer, their realtor notifies them there's actually another party that's also interested in the home and plans on making an offer as well. If Mark and Sarah really want to purchase this home, they're going to have to go above the list price in order for the seller to accept their offer. So Mark and Sarah do the math. They run the numbers and they decide that they can offer $50,000 over the list price or a price of $775,000. As they make their offer, though, they are told by the seller that the seller's not really certain the home's going to appraise for 775,000. And as a result, they're not sure if this offer is real because within most real estate contracts, there's a default provision that says that if the home does not appraise for the agreed upon sale price, then the buyer can walk away from the transaction and get their earnest money back. In other words, it provides very little certainty to the seller that they're actually going to be able to sell the home for 775,000. So the realtor says, "Hey, I want you to talk to a person who understands appraisal gap coverage." And then we're able to sit down and I'm able to demonstrate for them that by offering appraisal gap coverage in their offer, it's going to strengthen the validity of their offer to the seller. But they are going to have to agree to potentially buy the home for more than the appraisal says it's worth. So let's take a look at what this actually means. So we decide that they're going to offer a $50,000 appraisal gap coverage. What that means is that even though they're offering 775,000, even if the home appraises for 725,000 or $50,000 less, that Mark and Sarah are still willing to follow through and buy the home. And in this, what we do is we actually show Mark and Sarah their worst case scenario. So worst case scenario number one is that it appraises for 725,000. And if Mark and Sarah want to proceed with the original loan terms or an 80% loan to value, then they're going to have to come up with an extra $40,000 in cash to be able to make this purchase work. However, that's not the only option. And there's a misconception out there that if you accept appraisal gap coverage, you're automatically going to have to bring in more cash if the appraisal comes in low. But that's not necessarily the case. See, the second option is we can keep the loan amount exactly as it was going to be in the original offer. But now their loan amount exceeds 80% of the appraised value, and therefore we simply have to add $78 per month in mortgage insurance for their situation. Now, keep in mind, mortgage insurance can vary client to client. Now, Mark and Sarah decide, you know what? We're comfortable with option two. We wouldn't have to bring any more money out of pocket. We would just have to incur $80 more per month in mortgage insurance. And so they add appraisal gap coverage into their offer. The seller accepts it, and they end up with the house of their dreams. So if you're, again, a home buyer that is potentially facing a competitive housing market, then we have three tips for you. Tip number one, make sure you get fully pre-approved early in the process. Make sure you're fully pre-approved before you start actively shopping for a home. Number two, make sure you know your numbers. How much are your payments? How much are your closing costs? That way you can make the most aggressive offer that you feel comfortable making. And tip number three, make sure you get educated on appraisal gap coverage before you sit down to make an offer. Because again, that can be the difference between you having the seller accept your offer with certainty or missing out on the house of your dreams. If you have questions or if you want to get pre approved and prepared to win in your marketplace, please contact us today. We'd be honored to help you. Thanks so much.